Good day, ladies and gentlemen. In this particular video, I'll be teaching you something you need to be doing on your charts every single time you come to the charts to do analysis. Okay, so it's going to actually help you have an idea of where the big banks and the big financial institutions that actually move the markets, where they would be targeting. All right, so what will that do for you? That can help you form a trade idea. That's the very first thing. Now the trade idea aspect is what I'm going to be teaching you in this particular video, so you can form or frame a trade idea from this particular system. That's the first thing it will do for you. The second thing is, even if it does not help you form a trade idea, it can actually be an extra confluence, okay, or give you a deeper knowledge and a clearer picture of what is really going on, which you can then add to your own personal trading system or your own trading idea. All right, so definitely it will be a plus for you. It's going to be an addition for you. All right, so what am I talking about? This has to do with liquidity levels, okay? And as you already know, liquidity always rests above relative equal highs, okay? Relative equal highs. So when you have relative equal highs and relative equal lows, okay, when you have relative equal highs and relative equal lows, liquidity always rests above that. Now, the word you need to pay attention to is relative. So don't go looking for eyes that are exactly equal. Maybe you're now placing crosshairs on the eyes, or the lows. You're placing crosshair on them to make sure that they are equal. No, the market is not perfect, so it won't always be equal, but it has to be a visual equality. It has to be visual, okay? So the equality has to be visual. It should be something you should just look at and say, oh, this level and this level kind of, are kind of equal, just visually. All right, that doesn't mean if you put a crosshair there it will give you exact values. No, that's not the way it works. But visually you just get to see that these points kind of look equal, okay? So you see the equal highs, relative equal highs, and you see the relative equal lows. Most times liquidity rests above and below these, okay? So you need to make it an habit to always draw them, okay? So drawing them out will help you have an idea of where price could target, because what happens is these big institutions usually drive price below these relative equal lows and above relative equal highs, sweeping liquidity before they make their major move. Okay, so they will take liquidity, then make the major move. All right, so you want to be a smart trader. You don't want to just trade like a retail trader that is just waiting for you see double what's it called, you see relative equal lows, then you're looking for price to come and give you the third touch. That's a what's it called, that's retail mentality. Okay, first touch, second touch, you want to enter on the third touch. So they already know that you always want to enter on the third touch. So that third touch most times is when they will sweep the liquidity, and you must have probably entered and you place your stop loss below that level. So let's say you entered at this level, you're waiting for your third touch, right? Now price gave one touch, second touch. Hope you can see these lows are relatively equal. They are not exactly equal, but visually they look equal. So just draw an horizontal line across them like this and wait for manipulation among gold. And you know that gold is master of manipulations, okay? People don't understand, that's why they lose their money when they're trading gold. You wait for manipulation at that key level. Look at this manipulation. So they took out the liquidity resting below. So if you place your stop loss below this, and the space you gave between this level and your stop loss is not roomy enough, what do you think is going to happen here? Your stop loss will get taken out before price then moves in the direction you have already predicted. So you are right on the direction, but your execution is wrong. You are supposed to wait for this manipulation to happen, then you jump to a lower time frame, this 15 minutes time frame. So you can jump to a 1 minute time frame to actually see everything play out. Then when you wait for a market structure shift on the lower time frame, you can then enter. Your entry will be a little bit safer that way. You are entering as a smart trader that way. So drawing these levels give you an idea of, oh, this is where potentially the big banks and the financial institutions that actually move the markets can actually move price to, with the intention of manipulation before they actually move price in the direction they want to move price. Okay, so that's the first example. Look at this other example. Visually you can see that this low right here is relatively equal with this other low, right? And what do you see happening? Look at this crazy week. They push the price below that, taking retail traders stop losses before pushing price in the upward direction. So what are you supposed to do when you've drawn this out? Making an habit of drawing this kind of things out will help you, have an idea of what is going to happen. Now, if I draw this out, I already know that at some point they are going to manipulate price below this level. Okay, so once I see price coming back to this level, I'm jumping down to the lower time frame, not to take a trade instantly. No. So what am I trying to do? I'm waiting for a market structure shift. When they are done with the silly manipulation they want to do here, price will start moving upwards, giving you a market structure shift on the lower time frame. You're going to see a break of structure in the opposite direction. Then you can then enter on the order block created, or it could be the fair value gap created. Okay, so you enter and join the movement upwards. Okay, so that's the trade idea. All right, so I have one more example for you, so you can fully understand this concept. So you would agree with me that this low right here is relatively equal to these lows right here. Okay, so there's a kind of equality between them, though not perfectly equal, but you just see visually that they are kind of equal. So I drew an horizontal line across that, and I'm waiting for what price to do the manipulation. And you can see right here, what do you see happening right here? Price manipulated below. They push price below that level, sweeping liquidity. So this is where I'll be waiting for them. Okay, so even let's say I drew the line and this is the only touch I had, second touch I had when I drew this line. When price is coming back here, I would have jumped down to the lower time frame. But you see what happened? They did not manipulate price below, so I won't take any trade. They pushed price higher from there. Then later they came back to that level and pushed price below. I want to see price running below this low, because that's where the big move is going to happen. Because they would have used other people's stop losses as fuel. So that's going to be fuel to drive price upwards. And you can see the push after the manipulation has happened is greater than all these other pushes that you had. So let's see how far price went after making sure some retail traders did not follow the move by taking their stop losses. Then they pushed price in the upwards direction. So I hope you've learned a thing or two from this particular video. Please subscribe to the channel if you are a new viewer and turn on the notification bell. I'll see you in the next video. Thanks for watching.